really clears the path for Tesla to hit $500 a share. Let's talk about that and more with Eddie Ghabour. He is the co-founder and CEO at Key Advisors Wealth Management. Eddie, I got to imagine that you're happy about this vote and Elon Musk having a trillion reasons to stick around.
Absolutely. You're right. He's got a trillion reasons to try to win the AI race. And I think that's the big difference here when you look at Tesla is the bulls or bears will debate on whether it's a car company or AI tech trade. And obviously, we believe it's an AI trade. And as long as we continue to grow in this AI bubble and you think it's going to expand into 2026 like we believe, we're not going to bet against Elon. And Tesla hasn't even hit its highs of 2020 of last December. So we believe it's going to break through last December's highs and possibly finish at 500 plus per share at the end of the year. And this incentive-based concept is welcomed by shareholders. So I look at this as a very bullish development for the name. And as long as it's a bull market, we'll keep buying dips.
But all I hear about is how BYD, which is one of the Chinese EV companies, they kind of make these lower cost, some would even say disposable cars, that they're going to kill Tesla. Tesla's finished in Europe, and BYD is where it's all at.
Well, there's no doubt that there's a fundamental problem in the EV sales. And this is why, again, I think Tesla is going to be looked at in regards to whether they deliver on robotics, the robo-taxi. Because if it's just an EV play, we would not be buying the name, because I think that area, the competition is continuing to get broader. And fundamentally, I don't think it's a good place to be. So this is a pure bet on AI, and Elon Musk, who we believe is one of the most brilliant people on the planet right now.
Well, you also think Jensen Huang and Alex Karp are pretty doggone brilliant, and they are. NVIDIA and Palantir, the stocks have printed money the last few months, the last year, the last couple of years. But this week, not the case. They've been hit pretty hard. Still, again, don't want to make too much of it. They've made a lot of money. Any changed views on either of these companies, or maybe use some of the weakness to buy more?
We are buying more on the weakness. We bought some yesterday, and we bought more today because we're looking at the next 6 months. I think the reason why these growth names are selling off is because of a growth scare economically. And when we take a look at the government shutdown ending, and more importantly, the liquidity the Fed is going to put into an economy that's not in a recession while the market's near all-time highs, I think you're going to see asset prices continue to expand. And NVIDIA is the most important name in AI as well as in the NASDAQ 100 due to their weighting. So if you think the market's going to go up over the next few months like we do, you want to own the names that are going to carry the most weight. And we think these two are going to have the continued massive upside throughout this AI boom.
Similar thought process with Palantir?
Absolutely. Now, you'll want to sell them fast when we do go into a bear market because they will get hit the hardest. But right now, we're going to continue to ride because we don't think we've seen the last leg of this bull market yet.
All right. Eddie Ghabour, Key Advisors Wealth Management, co-founder and CEO. Eddie, like it. Have a great day. Take care.